Welcome to Profiletraders. This is Reza and you're listening to my market analysis for April the 5th. During the last report, I pointed out on a daily chart how from all point of view we have reached the upside objective goal, which was very much so duplicating every leg up here, from here to here, here from here to here, and finally this last one, which was calling for this point to be a potential target on the upside, which was roughly between 2065 to 2070. Sure enough, once we have reached this level, market is now pulling back. What is the significance of today? The significance of today is that we have opened with a gap down, and the whole day, despite how much they tried, they were absolutely unable to fill in the gap. From a technical analysis point of view, when you reverse from such an extended uptrend with a gap down and that gap is not filled during the same day, this could become a very potent reversal signal. I also stated very clearly, it's in the last video, you can go watch, that if we were about to break 2050, because of the fact that the structure was so underdeveloped below 2050, price was supposed to come and fill in that whole area, and that's exactly what we did. Once we did break below 2050, we came down and deleted all this area of very little development. Now, of course, the big move happened during the overnight, and today's day session, in my opinion, is one of the most horrendous and horrific price action I have seen for a long while, which becomes more and more common for the day session of ES. This electronic automated trading, program trading, and a whole variety of crooks that are manipulating these markets without any impunity and totally allowed by the SEC to happen, in my opinion, has literally destroyed the quality of this market compared to what it used to be. Last night we had a very beautiful drop down, but today it was just death of a back and forth and a back and forth and a back and forth without any clear picture of what was going to happen, nor that anyone committed directionally as it should have been according to what the overnight showed us in terms of weakness. So with this middle, or the close at the middle of the range, nobody won here. We basically opened at 2042 and a quarter and closed almost at 2042. The most wasted day I have seen for a long while. So my analysis is very simple from here. Market is badly in need of a pullback. Badly. Market has ignored every single item of a bad news out there and has only focused on one thing: QE, money injection from the central banks, and the fact that now Mrs. Yellen, as they say, has turned from dovish or from hawkish to dovish. So now, because that beautiful soul is dovish, market went up 270 points from its low. Now it's time to check a little bit the reality. The reality is that moving forward, every aspect of this economy looks to either be flat or softening, and I don't even need to go and tell you how weak and bad the rest of the global economies are. And this market needs now to justify this valuation moving ahead with earnings, because the companies have to show investors that the price they are paying for their paper is justified by the amount of business they are generating. And if that amount of business is not there to support the paper, this market is open to 100 to 150 points correction in a heartbeat. Therefore, as long as we remain below 2050, downside move should continue. For the very short term, I have two targets: 2026, which is a POC, the blue line, and then 2018, which is another blue line below that. After that, 2000, of course, is the big number. If we cross back through 2050, then on the upside we have 2058.5, and then 2066.75. And if we do get that far up, of course it's wide open to go break the most recent 2072 high and possibly hunt for the 2100, and then after that the very all-time high of 2120. As for gold, for crude, based on the head and shoulder break that I mentioned during the last report, I said we should come for 36 first, and then possibly 34, which is the ultimate downside objective based on this head and shoulder here. And I said if we do break below 36, be very careful, because you could get some sorts of forced liquidation coming in, and that's exactly what happened yesterday. We did break 36. Upon a break of 36, we dropped to 35.5, and then because last night did not bring any more sell interest on the downside and the profile went totally rotational, today right off the open there was a bit of a short covering, and the fact that we did hold the bottom of the overnight upon several retests, finally the very last minute we got a push to the upside in the attempt to go take the POC from yesterday, the blue line up there. Now, does that mean that anything has changed from positive to negative or negative to positive? Absolutely not. When you drop straight from $42.50 to 45 or to $35.50, that's a 7 points drop. It is normal that one of these sessions you get a bounce, which is most likely due all to short covering rally. Now if it continues to come a bit higher, 36.25 is the main level of resistance. If we pierce through that, my next level of resistance above that will be 38, and at 38 I think it's gonna, or 38.20, and at that point I believe it's gonna encounter again very strong resistance. If we remain below 36.25, very possible that we are going to come and retest this low, especially if it matches the fact that ES would melt down at the same time, and then past 35, 34, which I believe is going to encounter magnificent support, and that 34 should actually be a very good opportunity to look for a potential buy. And that's just an opinion, not a recommendation. So this is the report for today. It's going to be very interesting coming few days. Markets are definitely in need of a correction, especially for ES. Let's see if we get it or not. This was Reza. If you wish to learn market profile, join my trading room. Check my website, profiletraders.com. You can get 2 days trial, check it out, see if something that you like or not. Have a great evening and talk to you next time.